Hello dear students. Today I am going to talk about vouchers, meaning and types of vouchers. So meaning of voucher. See, a voucher is an accounting document representing an internal intent to make a voucher to an external entity, such as vendor or service provider. A voucher is produced usually after receiving a vendor invoice, after the invoice is successfully matched to a purchase order. A voucher will contain, detailed information regarding the payee, the monetary amount of the payment, or a description of the transaction and more. Now let us see the meaning of vouching. So you can see here, a voucher is nothing but a written or printed piece of documentary evidence which authenticate the transaction. That is, it proves that entries made in the books of accounts are real and genuine. So in this definition, meaning you can say that vouchers are also known as audit evidences. Business transactions are recorded in the books of accounts are on the basis of written proof. So as I said, vouching is nothing but a written or printed piece of documentary evidence. So it is a printed proof for the transactions recorded in the books of accounts. So it is a piece of paper that shows the details relating to the items appearing in accounting records. So example is a cash memo or bills or invoice, and similar other papers are considered as vouchers. And the other papers include salary book and wage sheets, credit notes, debit note, then insurance policy, credit advisors. So these are a few examples for vouchers. So apart from this, we also have debit advice, passbook, salesman statements, then agreements, dividend warrants, lease deeds, minute books, job cards, then articles of association, opening journal entries, then shared certificates, then we also have debenture certificates. So all these are very important vouchers. And all such vouchers are on the basis of entries in the accounting books. So the original vouchers are called as primary voucher, and the duplicate vouchers are called as secondary vouchers. So this we will discuss later. Next we have definition of voucher. So what is the definition of voucher? So according to Ronald A. Irish says that voucher may be a receipt, it may be an invoice, or it is an agreement and a written requisition slip, or in short any suitable written advice which confirms written transaction. So as per Ronald, business transactions are recorded in the books are on the basis of written proofs. So those written proofs are nothing but receipts, invoices, agreement, and any written requisition slip is also constitutes for this voucher. Okay, so next we have characteristics of vouchers. So this voucher has so many characteristics. So let us see those characteristics one by one. The first one we have, voucher is evidence. Of course, voucher is an evidence for recording the transactions in the books of accounts. So the essential feature of voucher is that it is used as evidence. Of course, it is an evidence. So the proof of dealing is available in the shape of a piece of paper. So it is an evidence. What kind of an evidence? It is a piece of paper wherein all the transactions, all the details are recorded in that particular piece of paper. So this voucher is an evidence for future reference. So the auditors are going to verify your transactions with your evidences. So it is an evidence. It is a proof for your transaction. And the second characteristic of this voucher is written form. So voucher is, it should be in the written form. So the essential characteristics of voucher is that it is always always in the written form. So the oral or spoken words cannot become vouchers. So the piece of paper in printed or written form is necessary. And the third one is entry in books. So the entry in the books of accounts is based on the voucher. So it is the it is the quality of vouchers that entries are possible with its help. So the entry is not possible when there is no voucher. So every transaction must be supported with some documentary evidences. So there is no entry, if there is no vouchers, there is no entry in the books of accounts. So it is compulsory in every organization that if there is no vouchers, if there is no evidences, or if there is no proofs, you cannot record such transactions in the books of accounts. And the next one is shows nature of transaction. See, the feature of voucher is that it shows the nature of transaction done by the management. So the purchase, sale, receipt, payment, then expenses are transaction which produce some sort of vouchers. The next one we have business name, and the vouchers are always in the name of business. So a person cannot issue vouchers in his personal name. Always it should be in the name of the business. Okay, so wherein the vouchers are always in the name of the business, the name of manager or the name of employee is not acceptable on the vouchers. So the vouchers are received in the name of business concern only. The next important characteristic is date of voucher. So the date is written on the face of the voucher. It shows the date of transaction. The date must relate to the current year, and it is essential for matching expenses with revenue. So date is a very important characteristics of voucher. The next one we have signature of voucher. And this is also a very important characteristic of voucher. And the feature of voucher is that it carries the number of signatures, and it should not carry number of signatures. So signature from the manager, signature from the concerned person should be there in every voucher. So the vouchers bears the signature of the seller on its face. The buyer approves the voucher, and the manager can put his signature on face or back of approval of dealings. And the next one we have is amount in words and figures. So this is also a very important feature, and the feature of voucher is that it carries the number of goods and services exchanged. So the amount is stated in figures and words. So always you have seen many vouchers. So there we have to write the amount both in words and both in words and figures. And the next one we have accounting year. So the voucher must relate to the accounting year. The transactions are divided into different periods on the basis of date. So the performance of one accounting year can be determined. The last and the important one is genuine voucher. So the voucher must be genuine. It must some sort of transaction relating to nature of business. The consent of management is essential here, and the original copies are genuinely acceptable in every organization. So these are the 11 important characteristics of voucher. So now next we have the points stated here and there are to be considered at the first place while checking the vouchers, as we have already discussed about this. So vouchers should be duly authorized by the stipulated signatory. Date of the voucher is mandatory. Name of the parties or clients mentioned in the vouchers, and it should be complete. So if it is not complete, vouchers are not accepted. Say for example, you have written the amount but the signature is not there, it is not acceptable, and it belongs to the business entity only. Next we have types of vouchers. Okay. So there are two types of voucher. They are one is primary voucher and the other one is collateral voucher. So let us see these types of vouchers one by one. So the first one is primary voucher. So what is primary voucher? So you can see here, primary vouchers refers to the written evidence in original. So it should be the original voucher. So example of primary vouchers are purchase invoice, cash memo, cash bills, confirmation of balances, bank statements, contracts, etc. So I'll just tell you what is primary voucher. So the original or printed or written piece of paper relating to the business transaction is called primary voucher. So it is a primary voucher. So written by a written or printed. It should be in the written form, or it is also in the form of printed, but it should be the original. So carbon copies are not accepted. Xerox copies are not accepted. Only the printed or written piece of paper relating to the business transaction is called primary voucher. So example, as I said, invoice, cash memo, cash bills, balances are called your primary vouchers. The second one we have collateral voucher. So this collateral voucher is also known as duplicate voucher and also secondary voucher. So this is also an evidence may be collected in the absence of original voucher. So if the primary vouchers are not available, you can collect the secondary or duplicate vouchers. So it is also called secondary vouchers like duplicate bills, carbon copies, and copy of resolution. Okay, and with this original, if as I said, if the original voucher is not available, copies thereof are produced in support or as a subsidiary to remove suspension and to satisfy the auditor. So if we produce duplicate vouchers or secondary vouchers, many auditors will not accept. So just to convince those auditors, we can produce this collateral vouchers when the original voucher is not available. And such vouchers are known as collateral vouchers. So collateral vouchers are the copies of sales invoice. So sales invoice original format is not available, whereas you will have carbon copies. You can produce that only for the verification to the auditors. The next we have examples of voucher. So these are the few examples of voucher. The sales, if we are doing any sales, then the vouchers are, you can produce these vouchers: sales order, sales invoice, goods outward, register, cash receipt, and bank pay-in slip. And if you are involved in any purchase transaction, and you will have these vouchers: quotations, purchase orders, purchase bills, goods inward registers, etc. And if the business is involved in any cash payments, and then they should have demand note, cash receipt, cash memo, etc. and cash received. If the company is receiving any cash, then duplicate or carbon copies of cash receipt, contracts, and correspondence with payee. Similarly, bank payments. If the business is making any kind of payment to the banks, then they will have checks, counterfoils, bank statement, etc. Similarly, the last one is payment received through banking channels. So if business receives any payments through banking channels, then they will have to produce bank deposit slip and bank statements to the organization. And so this is about the vouchers and types of vouchers. And thank you so much. Have a good day.